Welcome to another trading example. Topic: how to enter a long trade in a ranging market. In this session, we'll break down how to identify and execute a long trade when the market is clearly ranging. We'll walk you through the key details behind our entry decision, what we saw, what we anticipated, and how we responded to the setup. Before we get started, please take a moment to pause the video and review the disclaimer. The content provided here is for educational purposes only and should not be interpreted as financial advice. The chart context. We're looking at a 1-hour chart of Bitcoin. The asset is in a strong macro uptrend. Price is currently consolidating just below the all-time high, forming a clear range. Our initial expectation. Given the context, we anticipated a possible pullback, potentially sweeping the previous low to grab liquidity. This type of move is common in ranging markets and often provides a solid setup for a swing failure pattern. However, in this example, price doesn't follow through on that pullback. Instead, it front runs the expected liquidity level, giving us an earlier signal for a possible long entry. How we responded. We adjusted to what the market presented. Instead of waiting for the perfect setup, we identified key confirmation signals and acted accordingly. In this walkthrough, we'll explain what specific signs we looked for in the range, how we confirmed the long bias, the rationale behind our entry point, how we managed risk in this trade. Now let's take a look at the Bitcoin chart. The first chart is the index Bitcoin chart. Next is the Bitcoin chart on the Bybit exchange. We prefer the Bybit exchange for a number of reasons. Currently, we can observe that the macro value area high, VAH, is acting as the main resistance in this price range. At the same time, the anchored VWAP is proving to be the key dynamic support, helping to sustain the current trend. The trade setup or chart analysis. We've drawn a horizontal channel to define the range and key levels. The golden Fibonacci retracement has been placed to mark high probability reaction zones. Additional levels include daily and weekly key levels, along with fixed range volume profile data. With all these tools in place, we can clearly see that the anchored VWAP is the dominant support level. The long wicks on recent candlesticks suggest that buyers are stepping in at this level, indicating strong demand and potential support. This now becomes a key area of interest for a possible trade setup. What are we looking for to confirm an entry? Switching to the 15-minute chart, we start to see signs of a potential shift in market structure. Price forms a higher high, testing the daily level as resistance while continuing to find support at the anchored VWAP. On the pullback, price rejects again from the lower end of the candle, indicating a potential swing failure pattern SFP. This SFP, occurring at a known support zone, acts as our signal to consider a long entry. Our stop loss would be placed just below the wick of this swing failure, minimizing risk if the setup fails. It's also possible we may see another SFP where price sweeps the previous low to gather liquidity. This could offer a second opportunity to enter. Additional confirmation. To strengthen this setup, we would ideally look for signs of bullish divergence using tools such as CVD, cumulative volume delta, or momentum indicators. A divergence here would give us added confidence that the current down move lacks strength and that buyers may be gaining control. The second opportunity to go long on this setup comes during the pullback. In this case, price breaks below the value area low as well as key weekly and daily levels. A backtest of this zone provides a valid entry signal, offering another chance to enter a long position. The stop loss can be placed just below the weekly level and the val for effective risk management. Let's look at the end result and what lessons can we take from it. This example clearly shows the difference between a well-planned entry with confluence and timing, a late entry that increases the risk of getting stopped out. Patience, preparation, and precise execution are what separate a solid trade from a failed one. In summary, by carefully mapping out key levels and entering the trade at the right moment, not late into the move, we positioned ourselves for success because we had the following chart elements. The anchored VWAP is holding the trend. Price structure shows signs of bullish continuation on the 15-minute chart. A swing failure at support gives us a trigger for a long entry. Stop loss is placed below the low of the SFP, ideally confirmed by bullish divergence on volume or momentum indicators.